This is Radio Now 95.3 FM. Come for the news, stay for informed conversations.
CBN Governor Yemi Cardozo says that this represents about 9.5 months of import cover. This is the highest level of reserves that have hit since November of 2024. Joining the conversation this morning is Samuel Oyekomi. Mr. Oyekomi is a researcher and financial analyst at Lauren Berger. Mr. Oyekomi, good morning. Thank you for joining us on the conversation.
Yeah, good morning. Thanks for having me.
Can we start out by getting your reactions to this talk about Nigeria's foreign reserves hitting $40.11 billion?
Yeah, I think first it's commendable. We saw that same rally at some point last year, also where we had favorable international crude oil price. Production also was relatively stable during that period. And then, we're also coming from points whereby we see a backlog of FX backlog, right, to foreign investors. And then we're also coming on the back of reforms in the FX market that saw interventions of the CBN market reduced drastically as to when we were still practicing some form of fixed exchange rate. So I think it's quite commendable seeing that the reserves have also improved, just following the fact that earlier in the year we saw it come down significantly. But now, as we maintain this option, I think it's quite a welcome development.
So, Mr. Oyekomi, some analysis has said that the level of our FX reserves still shows that we're not necessarily getting it from increased inflows. And if you look at analysis around things like FDI and FPI, there continue to be concerns that we've not really hit the mark. Do you agree with this analysis? Can you speak to us on what exactly the indicators are?
Yeah, those quarters are also right. A huge part of the FX inflows we've had in recent times has been from FPIs. FPIs, right? The CBN has maintained relatively high interest rates maybe to attract hot money, that's FPI, in order to be able to manage FX stability and then impact inflation favorably. So a huge part of the money is coming in, I think, to FPI. So you see OMO bills. I think about earlier this month, the CBN sold OMO close to about 1 trillion there. Was I'd say can't really speak to the numbers now. And then we've also seen FPI's influence in terms of the equity market. Also, the market is been bullish, right? So you've seen foreign participants also, foreign participation has also increased significantly in that market. And when you have some of this portfolio type of money, FPI type of money, what you have is up money. Of course, the downside is that you can easily repatriate at any point in time. But the beauty is that it has been able to be stable so far this year. It's currently around 1,536, 1,535, and that's pretty much been the region where it was earlier in the year. Even at some point early this week, we saw a convergence between, but that was last week, we saw a convergence between the official and then the parallel market at 1,565. I think that's confidence to foreign investors who bring these FPIs to still maintain their funds in the Nigerian economy. And going back to the global economy, where the alternative interest rates are relatively high, but Nigeria has also kept its own benchmark interest rate at 27.5 as per the last time we listened to. For the short to medium term, we could see those funds to remain in the economy. So probably not short-term risk, but in the long term, I'm sure the government should be looking to attract better quality types of FX in terms of diaspora remittances and then foreign direct investment.
So I'm thinking through when the CBN governor first took office and he said to us, look, the Naira is undervalued. And despite the stability that we've spoken of through much of this year, there is still the agreement by and large that the Naira is undervalued. Can you speak to what the signs would be for, I don't know, some sort of indication that we're getting to a better reflection of the value of our currency, especially when you consider that In December of 2023, the reserves are said to have fallen to $33 billion thereabouts. So at $40 billion, and even then, the $33 billion, there were big questions on whether it was a real reflection of what the reserves were. At $40 billion and a steady, quote, steady rate of 1,005 to $1, what would be the indication that we're about to see a truly reflective value of our currency?
Well, so if you look at it from a technical point of view, you do your trend analysis in terms of exchange rates. Over the last 12 months, the exchange rate has hovered around 1,005 to 1,005, except for some outliers above and beyond those bands. And to me, that suggests, of course, the CBN has adopted a willing buyer, willing seller approach, which means that the market is fully floated, right? So if you are allowing market forces to determine the exchange rate, and it has been at that range over the course of, say, 12 months, that gives you an indication that that is where the market is pricing the exchange rate. And then when you look at other factors that also contribute to the strengthening of the local currency, talk about foreign trade. Foreign trade in Naira terms looks like it's significant, and that's as a result of valuation. But then, flip it and then look at it in terms of FX, especially the export component, you realize that it has relatively remained stagnant or even a decline. If you do like a 10-year CAGR, you see that value had actually increased about like 5% annually, and that gives you an indication that as much as it looks like so good, the net stop loss in terms of for international trade, it doesn't really reflect that there's improved FX inflows in terms of the trade component side of things, and then the FDI as well. I already mentioned that earlier. That's why remittances have not also, notably increased in recent times. When you look at these components, you don't necessarily see why the Naira should be stronger than where it is
Mr. Oyèkánmi, if I may, I mean, I hear you, but also these indicators that you're referencing now were way worse when the CBN governor took office. Right. And at that time, he was still insisting that the currency was undervalued. I know that at some point there was the talk about how a good estimate would be somewhere around 800, 900 naira to the dollar. And then at some point later on, we started to agree that maybe it was 1,300 to the dollar. And all of this was at a time when these indicators that you're referencing weren't great either. So there's real questions on what it was at that time that informed this estimation or this decision, and why now we should start to think otherwise.
Yeah, you're right again. I was one of those people who also said at the first instance that Naira should be around 800 to 900 to 1,000 mark, and even at some point even moved that estimate to 1,000. But what you see then was that the Naira leaped from about 460 to 800, then to 1,005, 1,006, at that point, even at some point 1,007. And what we had then was that there was a huge differential between the official and parallel market. So it appeared that the parallel market was somewhat, there was some form of speculative activities over there that is also dragging the Naira on the official side. Now, what the CBN has done in the last 6 to 7 months was to close the gap, right, and then to manage the parallel market side of things such that speculative activities, round-tripping activities do not occur as much as we used to have. And then that's why we are seeing the convergence. But when you look at the trend over the last few months, you realize that rate had remained over there at that point. At the current economic state in terms of indicators that we had stated. Now, if that has been true over time, it tells you that the market is pricing it at that point. To change anytime going forward, and the other indicators would need to also, influence the market sentiment into pricing Naira stronger. Despite the fact that the USD had earlier in the year at some point, the Naira still remained at that point. It just gives you an indication that that's where it is. And if you're talking about where indicators were at that point, what we were putting, of course, there are also market sentiment around that. What was happening in the global market at that point for the CBN governor and many other analysts, right, to be able to say, oh, Naira should be at 800. Now, then at that point, we had crude oil prices at the early $60 a barrel. Right now, crude oil price is around $67 per barrel, so relatively better compared to where we had high volatility in international product prices. So there are a number of things that have changed, and you just have to keep going back to your estimate and then revaluing them, right? And at this point, you would really take many of these indicators to take significant shape for the naira to appreciate where many of us have estimated for now.
Mr. Oyekomi, thank you for your time and expertise on this conversation. Samuel Oyekomi is a researcher and financial analyst at Northern Berger. He joined us this morning to speak on the report out of the Central Bank of Nigeria that the foreign exchange reserves have hit its highest level since November of 2024, closing at 40.
This is Radio Now 95.3 FM. Come for the news, stay for informed conversations.